In today's SMC Outlook, I'm sharing my exact trade plan for the DXY, the Euro, the Pound, and also gold for next week. So if you're new here, my name is Justin Bennett, forex trader since 2007, full-time trader since 2011. And as always, all of this is my opinion only and not financial advice. So looking at the DXY, we're going to start on the 4-hour time frame today, not the 1 hour, because I want to show something here that is occurring. And this is what we talked about last week. So if you saw the last SMC Outlook, what I mentioned there was that we had obviously an established downtrend. And we also had a break of structure on the 1 hour. Now, this does not show on the 4 hour, but this was a break of structure on the 1 hour chart. So with that, this up here becomes our external high. And down here toward the low, what I mentioned last week was that I was looking for the DXY to come up here into this OTE, which is the area between the 62% and the 79%. So I've made videos on OTE before, which I will link to at the top of this video. But this right here is what you often see the market retest before a reversal within a trend like this, okay? Now, there is something occurring here, though, that I want to show you that is potentially making an argument against looking for dollar shorts here. Okay, now this up here too, before I show you that, this up here too was a daily fair value gap. We also had a 4-hour fair value gap that were both unmitigated as of last week. These have both now been mitigated, okay? Mitigated meaning that they have been tagged, okay? So both of these have been tagged. There is a 4-hour FVG up here as well that we could see come under pressure, but again, this is the OTE for the DXY based on this downtrend. Okay, now with all of that said, okay, we could get a reversal from here knowing that the trend is bearish and we are getting a retest of that OTE. And furthermore, we also have a daily FVG or by mistake, a 4-hour FVG here off of this high. So this down here could come into play for the DXY over the coming days. But I want to show you something here that is occurring. And I made a video on this. I just recorded a video, in fact, that I will put out next week. Where this right here, okay, so I use something called what I call a distribution channel. Now, this is not a regression channel, but it is a way to identify changes in behavior. So what I mean by that, and I want to be clear too, that this is not about looking at this as support and resistance. This is not about, looking for shorts at resistance and buys at support. That is not what we're doing here. This tool for me is simply to identify a change in behavior. It's simply looking at the current price and saying, is the market doing something different right now than it did before? It's as simple as that. And before, what we saw here was this trend, okay? Now, even though we are below this high, what you'll notice is that if you imagine a midpoint through this channel, what markets tend to do is give you an equal distribution on either side of this. And this is why I like to call it a distribution channel, okay? So you'll notice this over and over again, where if you imagine a midpoint through a trend, you get distribution to either side of that, to the buy side and the sell side. So even though we are still below this high back here, right, we are getting a little bit of a change here. We're getting acceptance above the top of this distribution channel. And in my experience, when you get this tends to become a potential point of reversal. Now, with that said, though, keep in mind that we also still have this imbalance down here. Okay, so this imbalance down here around 98 that could come under pressure over the coming days. So even if the DXY is going to bottom down here, I would still like to see this region down here retested before we get some type of reversal. So keep that in mind. But ultimately, in terms of the actual structure here, right, it's going to come down to this high up here. Okay, so I want to be very clear that looking at this acceptance above the top of that distribution channel we just looked at, that is not enough for me to get bullish on the US dollar. That is simply enough for me to say that if I was bearish on the US dollar before, which I was, then this right here is enough for me to pause and say, I need more information over here. I want to see what happens between here. I am not looking for US dollar shorts right now because of this acceptance above the top of that distribution channel. I want to see more here to see what we get. Okay. And again, in my experience, this can keep me out of shorting in a situation where we are potentially about to get a reversal. Again, I'm not saying that's going to happen. I'm not saying it's likely even because we need a close above this high back here. But right now we are getting a little bit of a change in behavior from the DXY from what we've seen over the past few weeks. Okay. And again, I do have a video coming out next week that's going to explain this in detail. So you're going to want to stick around, subscribe to the channel, and stick around for that video because it will be a complete game changer for you. So looking at the euro now, what we talked about last week was the fact that really all of this is kind of internal. However, you could make the case that this high back here, so this is the hourly time frame, you could make the case that off of this high, right back here, we did have a close just above this. Okay, and by just, I mean 1 pip. So 1 pip above here. So you could technically call this a break of structure. Now, obviously that's a little bit subjective, especially with the holidays. It would have been nicer to see the close, well above here to really give us that break. And then that would have told us that this down here is absolutely an external low. And this would have qualified because then we would have the break of structure. We would also have the market taking out internal liquidity down here, okay, building internal liquidity, taking that out. So this would be a perfect external low. As of right now, it's a little bit up in the air because, again, this was a 1 pip close above, okay? But what we talked about last week was this internal change of character, okay? So again, if you treat this up here as a break of structure, okay, this close right here, what you can see with this low is that we did take internal liquidity. We had internal liquidity form here. We took that internal liquidity, had a 1 pip break of structure up here. So that meant that this was now our external low to hold, and we did not hold it. So what I mentioned in the last weekly outlook was that this close below, okay, right here, could trigger a pullback. And that's exactly what we've seen from the euro. Now, it got choppy through here with the holidays, but that's to be expected. Okay, we also saw this market come down here and mitigate two significant fair value gaps. One here, this 4-hour fair value gap, this daily fair value gap. Both of these came into play here last week. So really nice, pretty clean price action considering the holidays from the euro, following that internal change of character down there toward those FVGs. Okay, now it's no surprise that just like the DXY, we have, if we look at the 4-hour time frame, you can see, and again, I just want to be clear that I do have a video coming out soon that explains this concept in detail. But looking at a channel here off of the lows, what you can see here is that we had a really clean distribution channel off these highs and lows. So we had the lows down here. Okay, we had the highs up here. And again, this isn't about support and resistance. This is about just looking for certain behavior that existed previously that has now changed. And it has absolutely changed. Okay, so even though we are technically above this external low down here, right, this right here is enough for me to pause and say, I need more information. I need more information. I'm not looking to buy this market because I was a buyer back here, right? This was a bullish trend. Okay, but with this, close below, with these multiple candles closing below the bottom of this distribution channel, we are getting a little bit of a different look here from the euro. Okay, and that's, again, it's enough for me to at least pause and just see what we get over the coming days. Okay, so if I had to commit to, am I bullish or bearish right now on things like the 1 hour and the 4-hour time frame, I would say that I'm more neutral. Okay, so even though this trend is technically intact, this, acceptance below the bottom of this channel here is enough for me to take a pause and just say, I want to see more information here and see what we get from the euro over the coming days. Okay, so ideally we, either get the market coming up here, giving us a lower high off of these, this area up here. And actually, if you look here on the 1 hour too, I do want to point this out, that on the 1 hour time frame, if there was going to be an area where the euro wanted to test this before potentially carving a lower high, is that obviously we have these lower highs developing here, and there is going to be liquidity above these highs, no doubt. Okay. Now, if you look at this 1 hour candle back here, this is literally the only 1 hour candle right here that has not had any price action within it. Okay, meaning that if you look at this candle, okay, there was really no retrace into this. Every other high or every other candle on this chart, so like you look back here, I mean, these candles, obviously we had the market come back here and retest them. This one here, we had the market come back and retest it. Same thing with this one back here, and even this one with this high, okay? But the only candle that is left out of that is this one right here. So if the euro were going to come up here and sweep some of these recent highs and then give us a lower high within this leg, then in my opinion, this is going to be the area to watch, okay? But what it's going to take though for this market to fully turn bearish is, going to be, in fact, we can even do this on the 1 hour time frame, is going to be coming down here and taking out this low, right? Closing below this external low down here. And even if you were to make the case that this was not a break of structure and therefore this is an internal low, even if we close below here, it's still an internal shift, okay? So for this market to turn truly bearish, we would have to get a close below this low back here, give us that internal shift, and then I'm looking for, shorts against buy-side imbalances. So, it could even be something like this where we get the close below this low, get acceptance below here, and then we come back here and tag this area, okay? But either way, my stance on the euro right now has kind of flipped from bullish previously within this trend to now kind of neutral, given what I just mentioned. So looking at the pound now, let's take a look at this one, which like the euro too, we do have higher time frame change of character. Like if you look here at the 4 hour, we could absolutely make the case that this is an external high because this right here was internal. We had the break of structure below this. So this is our external high. And we also got acceptance above here recently, giving us that change of character. So I just want to be clear that even though I'm saying my stance on the euro is neutral, same thing with the US dollar, it does not mean that I am bearish on the euro and the pound. simply because structurally speaking, there is nothing to confirm that. Okay, now what I did mention last week was that this low right back here was the one to watch. So this low was the one to watch. And what I said there was that acceptance below here could give us a retest of that daily fair value gap, which you can see we came very close to it. Didn't quite tag that level, but you can see where the acceptance below here, really, it was just kind of a straight shot down here. Now, very choppy markets given the holiday season, and that is to be expected. And then once again, showing that fair value gaps, guys, are ones to pay attention to. You can see here on the 4-hour time frame, I mentioned this to VIP members in Discord, but you can see here that off of this low right here, we did have an unmitigated fair value gap before Friday, and the market is testing this here. Which, by the way, I should have mentioned this before, but there are a few hours left in Friday's session, so the markets haven't closed just yet. But it doesn't really affect anything I'm referring to today, because what I'm talking about today could potentially take, a couple of days to play out. Okay, but fair value gaps like this, guys, are ones to pay attention to. Again, you had this unmitigated area down here that the market came into, and then you had this unmitigated one up here that the market also just tapped here on Friday. So for the pound, technically speaking, you look at this on the 4-hour time frame, same thing on the daily. You do have that confirmed bullish change of character right back here. So there is not enough for me to say that a top is in. But again, looking at the DXY and the euro, we are getting a little bit of that change in behavior that makes me pause a little bit. Okay, now when we look at the pound though, and we take a look at the hourly time frame, okay, what you could technically make the case for right here is that you had a break of structure and a change of character down here. However, when you look at this overall trend, right, to me, this is still all kind of internal. All of this up here is still, pretty much internal to this trend. Really, the last external low, the last true external low was this down here, right? These lows down here, really, this is all part of the same leg, okay? So I think it's a little bit premature to call this, a reversal and that the top is in here as long as we're above these highs back here. But again, this is a case, though, where this is why I look at the DXY. A lot of people will say, well, why do you watch the DXY considering it's essentially the inverse of the euro? And I do that because a lot of times, with things like the pound, right, you might get a signal on the DXY that is actually front running a market like the pound. So if you're not looking at the DXY and you're just looking at the pound, this market looks a lot healthier than the euro right now. And so without looking at the DXY, you might be thinking, hey, I'm going to go out and buy the pound because we're in an uptrend, we're pulling back. And yet, if you look at the DXY, that acceptance above the top of that distribution channel, again, for me, that's enough to make me pause with the uptrend that we're seeing on the euro and the pound. So I need more information from this market to dictate where we go from here. Okay, I think in terms of structure, though, I think that the euro is a little bit cleaner here than the pound. And really, to be honest, the DXY is probably the cleanest between all of them. So this is my barometer for what I'm doing on the rest of these markets. Okay. So looking at gold, XAUUSD. So what I mentioned last weekend, and I want to be very clear here because I got a comment saying that, last weekend I was talking about the gap down here and that we could get a gap fill and just a continuation. And me saying that we could get this is not me saying I'm buying here. Okay. There was nothing to buy here. And for those who have seen my other videos on how I trade, I have videos on my exact strategy of how I trade. There was nothing, absolutely nothing to buy up here. If you were buying here, you were buying high. Right? There's nothing to do here in terms of a buy. And when you look at this on, let's go to the daily time frame, what we've now had from gold is a break of structure, okay? But markets are fractal, meaning that the same exact methods that we use on the 4-hour time frame, the hourly time frame, the 5-minute time frame, when we talk about a break of structure, change of character, and we map out OTE, guess what? The same thing applies for the daily time frame. So on the daily, what we have here is an external low. We have now a break of structure. This is our external low on the daily now that we have a break of structure up here. So this matters because what we can now see is based on this low back here. Okay, this acceptance from gold back below this high right here. Okay, and I mentioned this again to VIP members. This acceptance below here could potentially give us that move lower down here toward some of these sell side inefficiencies. And this is also true, okay, if we're going to get the DXY bottoming, like I mentioned. Now, still a lot of ifs, still a lot of variables. I get that. But if you're looking at this chart here, and I look at where OTE is sitting here for gold on the daily time frame, external low, up here to new external high, break of structure, you look at the OTE, right? 79% to 62%. Look at the imbalances down here that are unmitigated. We have a single print, TPO terms for a thinly traded area. We have a daily bullish fair value gap. We have a weekly bullish fair value gap. All of this is unmitigated right now. And all of this lines up exactly with OTE. So if I'm going to be a buyer on gold, knowing that we have a confirmed break of structure, but also knowing that we're getting acceptance back below this high over here. If I'm going to be a buyer here, I have to wait for, first of all, a move below the 50%, because right now we're in premium. So if I'm going to be a buyer here, I cannot buy above 50%. Okay, so that's the very first thing, is I can't be a buyer up here above 50%. Now, ideally though, I want to be a buyer in OTE. And we can see here again, we have all of those unmitigated imbalances. Okay, so for me right now, I am kind of looking for, potentially a pullback on gold. However, at the same time though, would I call this a reversal and enough to get bearish? No, because right now we do have obviously an uptrend. And even though if this is an internal shift for a pullback, this is not enough for me to get bearish. Okay, because again, we do have the bullish break of structure above here. And all this is right now is just a return to potentially rebalance some sell side imbalances. Okay, so again, this is that pocket down here. You look at this price action back here. This is that area that has my eye right now for gold. I want to see the market come back here, fill in these imbalances. Then from there, I will be looking for a lower time frame change of character to get bullish again. And then from there, it becomes really simple. We start targeting some of these highs, obviously if we get the pullback, right? We don't know if we're going to get that just yet. Okay, but that's what I'm looking for on the US dollar index, the euro, the pound, and also gold. So I hope this video has helped. If it has, be sure to keep it locked in here, subscribe to the channel. Also check out this video right here where I walk you through the 3 simple steps to look for when trading order blocks. Have a great weekend, and I will talk to you again next week.